Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Direct Digital Holdings, and let me tell you, it's a bit like watching a magician pull a rabbit out of a hat, only to find out the rabbit's been eating all the company's carrots. Get ready for some interesting revelations about their recent financial performance. This report covers their results for the first 3 months of the year. We're going to break down the key numbers, see where they're making money, where they're losing it, and what it all means for the company's future. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come check it out. First off, this is a Form 8K, a current report, meaning it's giving us an update on something important that happened. The date on the report is May 6, 2025, so this is pretty recent information. The main event is Item 2.2, which covers the company's financial results. This section is where they announce how they did in terms of revenue, profits, and other key financial metrics. Basically, they put out a press release about their earnings. That press release is attached to this report, so let's take a look. We are interested in the numbers. Okay, let's get into the financials. Now, because this is a press release attached to the 8K, it's not as detailed as a full quarterly report, but we can still extract the juicy bits. I see their total revenue for the 3 months ended March 31, 2007 $7 million. Their gross profit, which is the revenue left over after subtracting the cost of goods sold, was $15.4 million. This means they are making a profit on what they are selling before you start counting the rest of the expenses. Now, here's where things get interesting. Net income, which is the real profit that matters, was $0.8 million or 2 cents per share. While any profit is good, this number is quite small. They also mentioned something called adjusted EBITDA, which is a way of looking at profit before interest, taxes, depreciation, and amortization, with some other adjustments. This number came in at $3.1 million. Companies use this to show how profitable they are from their operations without the impact of things like debt or accounting methods. It's important to remember that this is a non-GAAP measure, meaning it's not calculated the same way as traditional accounting numbers. So take it with a grain of salt. Now, looking at their liquidity and capital resources, basically how much cash they have and how easily they can get more. It looks like they're trying to put a positive spin on things here. They mention that they believe their existing cash, along with what they expect to earn from operations, will be enough to fund their operations for at least the next 12 months. This is good news because it shows they aren't currently expecting to run out of money soon. Finally, we see the signature of Diana P. Diaz, the Chief Financial Officer. This means she is the one signing off on the accuracy of this report. Now let's step back and take a look at the bigger picture. Direct Digital Holdings is in the advertising technology business. They help companies buy and sell digital ads. The digital advertising market is growing, but it's also very competitive. You've got giants like Google and Facebook, as well as a lot of smaller players. The numbers tell a story. Revenue is okay, but profits are very thin. The company emphasizes its adjusted EBITDA and liquidity, which suggests they're trying to highlight the positives. But a closer look reveals that traditional net income is not that impressive. It's like they are trying to distract you with shiny objects while hiding something else. What are the risks here? Well, the digital ad market is changing all the time. New technologies and regulations could disrupt their business. Also, their small profit margins mean they don't have a lot of room for error. One bad quarter could put them in trouble. On the other hand, the market is growing. If they can innovate and grab a bigger share, they could do very well. In conclusion, Direct Digital Holdings is a company with potential, but also with challenges. The numbers suggest they need to focus on improving their profit margins and managing their costs. The fact that they seem to be emphasizing non-standard metrics like adjusted EBITDA makes me a bit cautious. It's always a good idea to look beyond the hype and focus on the core financials. Alright, that's our breakdown of Direct Digital Holdings' latest report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.